All right, we are 1 month in officially of scaling my account from $25,000 to $32,000 in the next 52 weeks. Over the last 4 weeks, we made a total of $912 collecting premiums from selling options and running the wheel strategy. So this week, we're going to start with some positions for week 5. We did get assigned on 300 shares of the SoFi call options last week at the $16 strike price. So we will have an additional $4,800 of cash to sell additional puts with this week. As you can see here, we still have these 100 shares of Chewy that we were assigned about 2 or 3 weeks ago. I will be selling a cover call option on Chewy this week. We do have about $22,000 of cash to work with to sell additional puts with. So I'm going to go ahead and go to the chart view here so we can actually pull up Chewy and sell our first covered call option. So here, as you can see, Chewy is trading pretty low on the Bollinger Band. If we zoom in here a little bit, you can kind of see where it's been trading. Kind of had a rough downward trend here. Kind of started recovering here around the 19 price and it has gone up for the past week or so. But we're going to continue to sell covered calls at our entry price, which is $24 a share. So I'm going to go ahead and find the $24 strike price here for the June 5th expiration date. There's not going to be a huge amount of premium here on this side, but we're going to go ahead and choose this one here. There's about $9 of premium to be collected. We're going to choose one contract here since we do own 100 shares. $24 strike on the covered call option, collect $9. I'm going to go ahead and confirm and send that off here. And we should be able to get filled at that price. Cool, so I'm going to go ahead and fill that one. So that is the only covered call this week. That is the only share we do own at the moment since we were assigned on our SoFi covered calls last week. I mentioned that at the beginning. So we do have a lot of additional cash to work with. Now I'm going to go ahead and start selling some put options. We're going to go right back into SoFi. We're just going to keep bouncing in and out of those shares constantly and just agreeing to take ownership of shares at a low price, agreeing to sell those shares at a higher price, and that's exactly what has already happened for us already. So I'm going to go ahead and actually move this chart over a little bit here so you can see this. But yeah, basically what's going on is SoFi has gone up a pretty drastic amount over the past, I'd say, week or 10 days. And so that's why we were assigned last week at the $16 price, is because the price of SoFi was above $16 last Friday. And so we're actually going to continue to sell cash secured puts around, right now we're going to take a look at the $17.50 price. As you can see here, the price of SoFi has gone up pretty drastically above the Bollinger Band, which is these blue lines you can see here. I don't mind owning SoFi at all. I think it's a good long-term hold, in my opinion. So I'm going to go ahead and choose the $17.50 strike price here. We're going to actually sell 5 total put options. We're going to sell 3 at the $17.50 price, and we're going to sell 2 at the $17 price. So I'm going to sell 3 cash secured puts at the 17.5. Like I said, this is about a 1% return for the week on SoFi. If it does reach 17.5, we will buy an additional 300 shares, and we're agreeing to do that here. We're getting paid $15 per contract to do that. So I'm going to go ahead and confirm and send this off. We will collect $45 right now up front. Looks like that one was filled. And we're going to also sell 2 additional contracts at the $17 price. So I do like to vary my strike prices sometimes just to be a little more risk averse and just vary my strike prices up just in case both of them are assigned. Our entry cost into the stock itself will be at a lower overall price than if I were to just do 5 contracts at the higher 17.5 strike price. So I'm going to go ahead and fill these for the 17. We have 2 contracts. We're going to collect $17, $18 here for the 17 strike with 2 contracts. Looks like those got filled as well. Perfect. So those are all the SoFi puts for this week. I'm going to go ahead and take a look again here at Chewy. I'm going to attempt to lower my entry cost into the stock. This is really, really important. If you do have enough capital to work with, since we already do own 100 shares, I'm going to attempt to lower my average cost by selling an additional cash secured put. This will lower our entry cost and we'll be able to actually get a larger premium over time if we are assigned at this lower price we're about to sell the put at additionally. So here, I do like the $21 price here on Chewy. You can see here, if we zoom in again, it's trading pretty low overall. It kind of bounced up from this $20 level. Looks like there's some pretty heavy resistance there. I do like the $21 price here to sell a cash secured put. I'm going to go ahead and take a look at that premium here. Looks like it's about $13. So I'm going to go ahead and sell one contract at the $21 strike. We're going to collect $13 for doing that. And we're attempting to lower our average costs. Right now, our average cost with the 100 shares we own is $24. If we are assigned at this 21 price, our new entry cost would be $22.50, which is good because that will lower it and we'll be able to collect a higher cover call premium moving forward. So I'm going to go ahead and send this off. Looks like we were filled on that put contract. Next one we're going to take a look at is Iron. We've been selling put options every single week of this challenge on Iron. We have never been assigned. I'm going to continue to do the exact same thing. I am bullish on this company long term. Although it's been trading very high on the Bollinger Band for multiple weeks in a row, we still have not been assigned. It continues to go higher. The premiums are large enough to where you can go pretty low on the options chain and still collect a large premium. So I'm going to choose the $53 strike price here, sitting right at this white line, which is the 30-day moving average. So I'm going to choose this one here. I'm going to choose the last cash secured put premium amount. We're going to do one contract for $5,300 of capital or collateral being put up. I'm going to go ahead and send that off. Looks like we were filled on that cash secured put at 53 for Iron for expiration June 5th. Every single one of these expirations that I'm looking at now for the cash secured puts are on June 5th, which is this upcoming Friday. Next one we're going to take a look at is Oscar Health. Same thing here as Iron. I am bullish on this company long term. They have been trading at higher ends of the Bollinger Band while we've been doing this challenge. I'm going to continue to sell cash secured puts at these higher prices because I don't mind being assigned and the premiums are high at these levels because they are more volatile stocks than most positions. We're going to actually enter two cash secured puts on Oscar at the $20.50 strike price. We're going to collect $6 per contract. This is about a 0.25% return for the week on Oscar Health. That equates to around a 10-15% return on a yearly basis. Doesn't sound like a lot, but it is a decent amount of capital. Looks like we were filled on those two cash secured puts at 20.5. You can see here it's recovering a little bit. It gives us a good opportunity to sell a put down here at the 20.5 level, which is right at the 30-day moving average. Next, we're going to take a look at HIMS. This will be our last cash secured put we will be able to sell with the $25,000 of capital we do have to work with for this challenge. So as you can see here, HIMS went up pretty drastically here over the past week or so. There's some resistance here around that $22 price, and again at this $19 price. So we're going to take advantage of that. I do like the $24 price for this week. It's below the 30-day moving average, below the middle of the Bollinger Band on the lower end, which gives us a better entry cost. So I'm going to choose this $24 price. We're going to collect $10 of premium for agreeing to buy 100 shares of HIMS if it does reach $24 by June 5th, which is the end of this week. This is about a 0.5% return for the week for HIMS. So I'm going to go ahead and send this off here. That is going to be our last cash secured put contract for this week. So we just got filled on that contract. So that is pretty much all for this week. Basically what I have done throughout this entire video and showed you guys for, this is going to be the 5th time in a row, is how I sell options to collect premium every single week while the stock literally can go anywhere and I make the exact same amount of profit. If you want to learn how I do this in more depth, you can just comment the word call down below and I'll send you a free booking link where we can actually just hop on a free call together and see if this is something that may even make sense for you to start doing on your own. We can talk about that in depth if that's something you're interested in. Otherwise, stay tuned for week 6. We're going to continue all the way till the end of the year and see if we can hit our goal of $32,000 scaling from $25,000. All right, I'll see you guys next week.